right, we're looking at Google, okay? And I got my pattern finder chart up here, and you can see we're in a pretty good down channel. So I want to create a trade that's going to short Google. So besides that, let's look at one other thing. Let's go over to, I want to see the IVR. All right, so here's Tasty Trade. So the IVR is 41. When I put this trade on, which was yesterday, right before market close, we were right around like high 30s, 38, 39. So volatility has actually increased, which is a good thing. If you are long options, you want a volatility expansion. I was considering a call credit spread to do that because IVR is so high. And, when you are short vol and have theta working on your side, working with you, overall that tends to be long term, that tends to be a better statistical strategy rather than having theta working against you. But in this case, I am choosing some sort of long put strategy, either a debit spread or a diagonal. And before we pick out our prices, our strike prices and everything, I just want to look at the current price. So we're right at $93, about $94. So a little bit further down, I think the bottom of this would be, I think 90, around 90 is a good short or long put strike, and then maybe sell something a little further out of the money, like an 88. And before we actually go into Robinhood and pick out those strikes, I just want to show you one other thing. So besides this visual, resistance that we're up against, so actually right around here would have been a good time to short, right when Google hit around 102. But besides that visual resistance, let's take a look at the pivot points, which show us the different moving averages. So we're below the 10 exponential, below the 21 exponential, 50 simple, and then we still got the 200-day moving average intact. So we could see I think we're definitely heading lower in the short term. So, all right, we're in the Google options chain. So this is this is Friday morning. So basically 1 week from now, the December 16th contracts expire. So I want to have a little more time. I want to give myself basically 2 weeks for my long option. So we're going to buy the 90, and then we're going to go ahead and sell. And I think just giving me maybe 1 week. I could do the 23rd, but I'm going to keep the short option shorter in time. And for that, I'm going to go ahead and sell the 88 here. So it's 2 strikes wide, and our total cost is $1 and change. That's a debit, of course, and our break-even point, Google just has to get below $94 for us to break even. So basically, Google right now already, this is Friday morning. I put this trade on actually yesterday. So already this should be profitable. And our max profit here is if we hit that short strike. So basically for a risk of $1, I can double that, more than double that, basically 2.5x that for a total profit of 260, which I think is pretty attainable based on that graph. We need to fall, the stock needs to fall about 5%, which is actually sort of significant. So, but anyway, that is my thoughts on Google.